Well, my answer to that is, how much money can central banks print? When they can't print anymore, maybe they can't buy anymore. Remember, they don't have to buy gold in dollars. China is the world's biggest gold producer now, not South Africa. Right? So I just see that as a very, very not just bullish, but downside mitigating change that's solid. If gold corrects, if gold were to drop $1,000 an ounce, Jesse, the stocks, of course, would get creamed. People would be panicking. There would be blood in the streets. But that would take us down to over $3,000 an ounce, the actual business. So the recession has nothing to do with the price or the exchange rate, because silver is still money. So the exchange rate going, I mean, that's several ways to look at that. The recession call, and by the way, I didn't say there will be one. I said if there is one, then that becomes a headwind for silver, or at least the tailwind from the industrial aspect that it has in addition to its monetary aspect goes away. So that's still there. That's still on the table. Trump shock is still happening as we speak. It was last Friday that Trump riled things up. The 100% tariffs on China. They're saying now it's basically Beijing has to back down on the rare earths restriction or else. And maybe they will. I don't know. Xi doesn't seem like the kind of guy to just, want to bend the knee. So we'll see what happens. But the point is, Trump shock is alive and well. That has yet really to work its way through the real economy. So there is, I'm not calling a recession, because don't forget the money helicopters, but there's reason to be concerned about weakness. So that's still on the table. As far as the record run here of silver, the reasons for concern are different. I mean, I'm long. I'm delighted to see silver finally reach a nominal all-time high and stay there. This is a big deal. Like the 2011 spike or the 1980 spikes, those were up intraday and right back down again afterwards. So this is already different. It's staying here. So, that's pretty exciting, pretty encouraging. On the other paw, it's not just there because of, financial things or de-dollarization or, there's talk about maybe central banks are going to start buying silver, and a few oddities aside, I really don't think that's the case. This isn't a Basel III thing. The central banks are not the poor man. They don't need to worry about the poor man's gold. And silver tarnishes. They don't need to spend time polishing those bars in the basement. It's not as easy to keep. It's bulkier and more temperamental than gold is. Maybe I'm wrong. I don't see the central banks piling into silver. But we do have right now a squeeze in London. There's not enough physicals there right now. And so that's, it's not just driving things, but it's why we have that backwardation. It's why spot is higher than the futures, London versus COMEX. So it's possible that sticks around for a long time, but, silver is still being mined quite actively. It's a byproduct. So I suspect that it won't stick around that long. Now, it's also been declared a critical mineral, at least by the United States. So it's not as easy as just put some silver back on the airplanes and send it over to London. So what am I saying here? What I'm saying is it's exciting to see silver run up like this, but it's actually a relief to me that there seems to be a bona fide squeeze going on in the physical market right now that's causing it. And why that's a relief is because if silver was finally catching up to gold, any gold or silver bull will tell you that silver usually lags and then catches up to gold at the end of the bull market. It more than catches up to gold. So if silver was doing that more than catches up bit right now, that would be a signal that this bull run is coming to an end. And as a fundamentalist, I don't think that's the case. As a long, I don't want that to be the case. Mr. Market doesn't care what I want, but I'm relieved. That's why I'm relieved that what seems to be going on is silver-specific kerfuffle in London right now. And then I'm hopeful that we go on to a more regular march upwards. That would be much better for the longevity of this market.
Silver's recent surge to a sustained all-time high marks a historic shift. Unlike the flash peaks of 1980 and 2011, today's prices remain elevated, signaling deeper forces at work. Importantly, this rise is not driven by central banks, who traditionally favor easily stored gold, but by physical market dynamics. A tangible supply strain in London has created backwardation, placing spot prices above futures. This rare condition suggests immediate scarcity rather than speculative hype. While silver production continues as a mining byproduct, its newly classified critical mineral status adds regulatory constraints, complicating shipments and contributing to today's tight supply.
The ultimate irony to me here is that, silver bulls, they really tried, and they tried to organize. They tried to sort of crowdsource a silver squeeze. There was more than one attempt, and they all fizzled. It's too big. There's not enough of us diehard hard money advocates. People like you and I, and even our audience, the entire audience. We're such a tiny slice of the overall investment world, let alone the population at large. We just couldn't swing it. But Donald Trump, love him or hate him, like, he has actually manufactured a bona fide silver squeeze. Like, there is not enough physical in London right now, which, imagine if somebody had asked me, or you, or if you had talked about this with any of your guests a couple of years ago, and they predicted not enough bars in London. What would you have said? What would you have thought? I don't know, but it's amazing to see it happen, and it's a byproduct. I don't think Trump intended for this. This wasn't a design to produce a silver squeeze. He included silver in the critical minerals list, and he talked up all his tariffs and things, and a lot of bullion left London and went to the U.S. And now suddenly there's a squeeze going on. So that's real. It's physical, and it's kind of fun to see. You were polite enough to ask the second part of your question by saying, could it? To which I answered yes. Will it is a much more difficult question to answer and be right about. So will it? I don't know. But could it? Yeah. If this squeeze continues, and don't forget that the manufacturers, the solar panel people and the electronics people who use silver in their real world applications, this isn't optional. They can't just substitute aluminum or copper or something for these functions. Well, I guess you can make aluminum mirrors, but for the solar panels, you need the silver, right? So there is a I can't put a number on it. I want to say a probability, because for a probability you have to have your P's and Q's and divide them and get a ratio. We don't know what those numbers are. But there's not just a non-zero, but I would say, let's say, a non-trivial possibility that as that physical supply demand continues, as the physical demand continues from the actual real world users, and not enough people are bringing in grandma's tea service, right, to supply that we could see this melt up. So yes. Could we see a CPI adjusted real all-time high? Yeah, we could. That could happen within a month or two. Will it? God only knows. Certainly not I, said the wolf. It could be that the current surge has induced the various participants to change, and it resolves itself soon. I really don't know, and I wouldn't believe anybody who did say that anymore.
For years, silver enthusiasts attempted coordinated efforts to spark a supply squeeze, and each campaign fizzled due to the sheer size of the global market. Ironically, geopolitical decisions, not investor movements, finally triggered what enthusiasts couldn't. U.S. policy shifts, tariffs, and critical mineral designations redirected bullion flows from London to American vaults, inadvertently tightening global availability. This squeeze is genuine, physical, and industry impacting. Manufacturers in solar, electronics, and specialized technologies cannot simply substitute silver, intensifying the draw on shrinking supplies. While no one can predict how long this imbalance lasts, the conditions for a sharp, rapid price escalation undeniably exist.
So the most sensitive one here would be silver as a byproduct from gold. Obviously, they occur together a lot. They're mined together. And a gold miner right now is incented to ramp up his or her output anyway, right? So that miner will respond to the higher silver price and the higher gold price, which are moving in the same direction. But that's actually pretty small. The base metals are a much larger fraction. I understand it's something like 60%. And if you pick them by the metal, the single highest producer of silver as a byproduct is actually copper. If you add lead and zinc together, which they commonly occur together, lead and zinc combined are the big one. But if you add all of those together, lead, zinc, and copper, it's huge. This really is where most of the world's silver comes from. I think until recently, the Polish copper miner was the world's biggest producer of silver. And so that tells you a lot. I mean, that's just one company, but it tells you about the structure of the market. So for silver bulls, this is actually good news. It means, okay, even if the gold producers ramp up to meet the market, that will have a marginal impact on silver. Yes, it will produce more silver, but not as much as if copper were going through the roof and copper producers were ramping up. And the even better news is that even if copper does go through the roof, which I do expect, and I'm sure you'll ask about in due course, these copper mines take a long time. Like one big enough to matter, they're a little high-grade underground bits here and there, but they don't move the market. These great big, mega pit projects that are where the world's big copper supply come from, those take years, even if you have the permits, which can take years or even decades, right? Looking for a resolution there. Once you even have the permits, it takes years to build these gigantic mega projects. So, copper could go to the moon, tomorrow, and it would have zero impact on the silver supply right away. Now, in due course, though, it would. In due course, especially if the safe haven demand were to go down, Trump fixes everything and the world is happy, happy, joy, joy. And, I don't see that as a likely outcome. But if it happened, right, and monetary safe haven demand went down for silver at the same time that industrial output was cranking up, that would actually be bearish for silver. Not a concern I have right now. Right now, it's the opposite. I'm the only shadow on the horizon for me, other than, hockey stick always calls for caution. But in terms of market fundamentals, I'm a fundamentalist, not a chartist, is silver does have its industrial side as a use, not as a byproduct on the use side. And if Trump shock does cause more economic weakness, that turns into a headwind for silver that does not affect gold. So that's something to watch out for. That's not a call. It's not a prediction, because don't forget the money helicopters. But it's something to watch for. If it materializes, then it's reason for caution.
Silver's supply chain is dominated not by dedicated silver mines, but by copper, lead, zinc, and gold producers. Even if prices surge, new supply cannot respond quickly. Massive copper projects, responsible for most byproduct silver, require years of permitting and construction, making rapid output increases impossible. Meanwhile, global electrification, AI infrastructure expansion, and defense sector growth continue accelerating industrial demand. Though safe haven buying may fluctuate with political cycles, the structural need for silver persists. If economic weakness emerges, industrial usage may soften, but the broader inflationary backdrop and monetary concerns help support silver's longer-term trajectory.
First one is, yes, I am. Well, I am and I am not. I'm not buying any gold or silver stocks right now. I've for the first time in my career as the independent speculator, I have yanked my shopping list completely. Just because, the better ones, they're, if not at 52-week highs, all-time highs, they're the hockey stick thing. And the whole idea is to buy low, sell high. Now, I'm not saying it can't or won't go higher. I'm just saying this is not a buy low moment. And markets fluctuate. So I've never done it before. I have no shopping list this month. That said, I'm already long, so I'm not feeling any FOMO, right? I've got tons of gold and silver in my portfolio already. So if it keeps screaming upwards, fine by me. I'm fine with that. But yeah, it would be very difficult for me to say to anybody who's brand new to the space, just coming in, sure, fine, it's got to keep going to the moon. Bye, bye, bye. You can hurt a lot of people doing that, Jesse. I mean, even if it does eventually go higher, if the next big leg is actually down, those Johnny come latelys, they will panic, they will sell, they will have bought high and sold low, and they will be hurt. And I don't want to encourage that to happen. So no shopping list in gold and silver this month. That said, is there a case to pile in? Actually, there is. Not as a disciplined speculator. I am not doing this. I'm just saying, if you've got Vegas money, you want to gamble instead of going to Vegas and pulling the slot machine. There is a chance that we go into the mania phase. Like the next big move could be the mania phase. If that happens, gold and silver stocks will go much higher. And by the way, the Johnny come latelys, they'll pile into what Doug Casey used to call the go-to stocks first, not the crappy little juniors. So you could get more alpha, ironically, on the bigger stocks in that mania phase, because that's where the dumb money, pardon me, but the Johnny come latelys, that's where they'll pile into. They'll say, oh, what's a gold company? And they'll do a Google search. And you and I both know, and the audience knows who's going to come up, right? What's a silver company, right? They'll find them. So there is a case to be made for those with a hankering for high stakes gambling. I mean, there could be an explosive move, could be the next thing. An explosive move upwards could be the next thing that hits this market. So if you like gambling on that sort of thing, I'm not going to say no. I'm saying I'm not doing it because I'm not trying to swing for the bleachers here. I am trying to consistently, as reliably as possible, make money over time. And the way to do that is to buy low and sell high, not to buy high and hope to sell higher. And I think I lost track of your 5 questions, but I think the ending question was basically when to sell high.
Yeah.
I'm not smart enough to figure that out. I don't know when the market is going to top. Even my mentors, Rick Rule, Doug Casey, none of them claim to know that. I think anybody, no offense to any chartists in the audience, anybody that's convinced that they're Fibonacci this, that, or the other says, oh, it's got to go down now or up now. I think that's dangerous. It's worth taking under advisement, but to believe it like the gospel is dangerous, I think. So what I do, and we've talked about this before, I think, Jesse, is I have a strategy I call the Upside Maximizer. That's a free report on our website, if you don't mind me mentioning it. And it's like a stop loss, except for instead of a stop loss, it's a trailing ratcheting stop on my wins so that I don't have to know when the market tops. If things roll over, then I get triggered. And at the very least, I can recover my initial investment and be risk-free. Or if things are looking scary, I can, take a lot more, all of my profits, and leave just, or if they're all getting triggered, it's not just this company, but like the market is rolling over, I might be much more aggressive and like close positions and exit in a bigger way. To be able to, and then I'll have cash to buy back in if it's just a dip, or I'll be out of harm's way if the next real move is a bear market. I'm not predicting that. I'm not calling that. I'm saying I don't know, but I have a method for making sure that all these big wins we're all enjoying don't slip through my claws.
With silver and gold stocks climbing to multi-year or all-time highs, disciplined investors face a dilemma. Momentum may accelerate into a full mania phase, but entering too late risks painful losses if markets correct. Experienced speculators avoid buying into parabolic moves, prioritizing long-term consistency over chasing peaks. Newcomers who rush in at elevated levels often capitulate during downturns, selling low. While aggressive traders might gamble on a blow-off top, cautious investors focus on capital preservation. Trailing stops, profit ratchets, and disciplined exit systems help capture gains without needing to guess the exact market top.
Industrial use cases are not a bad thing. And yes, they can be volatile. But ultimately, I see silver as relatively cheaper than gold still. It's, if I can't say gold is a buy low, sell high opportunity, at least silver is only nominally at all-time highs, whereas gold has already reached real all-time highs, or at least real, according to the CPI. So there's a different case there. And the additional tailwinds from the industrial use, the Trump agenda is inflationary. Europe's remilitarization is inflationary. The global average is inflationary, which is good for silver too. So I've been saying I see silver as the win-win metal because it gets the benefit from the monetary side, the debasement trade, Isn't it striking, Jesse, that Wall Street is caught on to monetary debasement? The debasement trade has become the latest buzzword on mainstream financial media. Gold bugs are like, what have we been saying for decades? Right? But now it's become the trendy thing. Like silver benefits from that as well as the electrification trend and these other factors. So, I, people call me Darth Silver and all that stuff, but I'm actually quite bullish on silver. Um, but to the question on the gold, on the fundamentals, yes, it could go higher. This isn't something new and awe-inspiring for me to tell you, but the central bank gold buying is absolutely a game changer, and I think it's irreversible. That is a one-way paradigm shift. It's not going back. The Chinese and the Russians certainly are not going to suddenly decide to trust Washington and New York with their financial well-being, right? So that's not going away. And there's some people say, well, how much gold can they buy? At some point, the central bank gold buying will run out, will it? Well, my answer to that is, how much money can central banks print? When they can't print anymore, maybe they can't buy anymore. Remember, they don't have to buy gold in dollars. China is the world's biggest gold producer now, not South Africa. Right? So I just see that as a very, very, not just bullish, but downside mitigating change that's solid. If gold corrects, if gold were to drop $1,000 an ounce, Jesse, the stocks, of course, would get creamed. People would be panicking. There would be blood in the streets. But that would take us down to over $3,000 an ounce. The actual business of producing the stuff from the ground would be printing money, like literally making money, hauling it out of the ground, real money, right? And the better projects and the developers out there, if we crashed to $3,000 an ounce, those projects would still be very high margin. So with the fundamentals strongly supportive of gold, the central bank buying, the inflationary outlooks, all this stuff is supportive. And if we got a little correction, I don't know, I'd be nervous about still buying high. But if we got a big correction that scared the bejesus out of the market, I would see that as an absolute gift. I would pile in. Now, there's a non-zero chance that if that happened, it could be 2011, right? And we could go into a bear market for some years. So if I did buy that dip, more than a dip, if I thought, the market's giving me a gift, I'm going to buy low here, and then we go into a bear market for years, I would go underwater if I did that. I think the odds are the other way, though, because of the central bank buying, these other things we're talking about. I think even if we had some big panic, people, started to take profits and that triggered other profit taking and that cascaded into a big event, I think the odds are that would be a buying opportunity. And if it did turn into 2011 all over again, well, guess what? If you bought at the top in 2011, you're more than 2x that right now in gold itself. So for the disciplined, patient speculator, even that event would be survivable. I would like to avoid, as I was saying earlier, getting people to buy high and panic and sell low. But I'm telling you what I would do, Jesse. I think the answer to your question is fundamentals make me very bullish. The hockey stick makes me nervous. I honestly don't know what happens next. A little wobble probably wouldn't get me to pile back in. A big one, it would. And if it turned out that I have to be patient for a time, then I'd be patient for a time. But my expectation would be that if we had a big correction, it would be a very sharp V shape on the other side because reality would assert itself. And by the way, I think the central banks would swoop in big time if there was a big correction. I think it's unlikely that we see something of the magnitude of $1,000 correction, which is less than a 25% correction right now.
Gold's long-term fundamentals remain powerful. Central banks, especially in Asia, continue increasing reserves, reshaping the global monetary framework. Their accumulation reflects deep distrust of U.S. financial dominance and signals a structural shift unlikely to reverse. Even a sharp correction in gold would leave miners profitable at modern cost structures, and such dips could present rare buying opportunities. If panic selling triggered a major pullback, central banks might intensify purchases, stabilizing the market. Despite short-term volatility risk, the backdrop of money printing, geopolitical realignments, and sovereign diversification continues to reinforce gold's and by extension, silver's bullish long-term outlook.